Hey, welcome back to Florida Stacker on YouTube, a hangout place to talk gold and silver, bullion coins, as well as market news and more. All right, guys, in my time of building a healthy savings account in gold and silver, really for the last 10 years, I've been stacking. The last 6 years have been hardcore stacking. I can tell you that these are indeed the highest prices that I've seen to stack or invest in precious metals. Now, when precious metals prices come up as they have, I think it is more important than ever to consider your risk and opportunities in the market. So in today's video, I'm going to discuss a very low risk option to stack and hold physical silver coins. This is an established option, one that has been tested and tuned and is guaranteed to deliver results. All right, afterwards, I'm going to flip the coin to the other side and discuss an investment option, this with a lot more risk, but also potentially a lot more reward as precious metals continue to gain upward momentum here in 2025. So let's get right into it. So when it comes to playing it safe with silver, in my opinion, the best option, again, in my experience, is to stick with physical silver that tracks as close to possible to the spot price. Now, this way, you are not overly exposing yourself to fluctuations with premiums on bullion coins, bars, or rounds. Okay, to put it another way, if you buy as close to the spot price as possible every single time, then you make following the market and generally understanding whether or not you are up or down with your stack or investment a lot easier because you really only have the total weight of your stack and generally the spot price, right? So you got 200 ounces, spot's $30, do the math. But when you start mixing in higher premium coins and collectibles, getting an understanding of the true market value of your stack or collection then becomes a lot more difficult to do, and that is because supply and demand economics do influence the premiums on popular coins. Let's take the American Silver Eagle as an example, okay? You know, 1 month you're paying $2 over spot to buy one, the next you're paying $3 over spot, the month after that it's down to $1.75, and so on, because economics, right? How many Silver Eagles are in the market that dealers can get? How many are people wanting to buy? It takes some time to kind of flush itself out, and there's always a delay, right? So to keep it extremely simple, my absolute 100% tried and true best method for buying and holding wealth in silver is with the stuff that some of you guys just cannot get yourself to buy. And that is, even if it's a great deal, which is 90% circulated constitutional silver, okay? Now I'm gonna give you 2 quick reasons why that is my recommendation. Also, I'm going to, get into the negatives, but before that, I'll point out which 90% coin I think is actually the best of the bunch. Now, right off the top, 90% silver is usually the cheapest way to buy and hold silver, period. Okay? So that's number one. It's the cheapest way typically to buy and hold silver. So if you want a lot of weight in silver, this is a good way to do it on a budget. It is considered budget silver in many regards. We're talking circulated constitutional silver. You can get way up there in value on constitutional silver that's in slabs. Okay, we're talking rare, graded, maybe limited mint runs. That's in the collection bucket. But if you just want weight in silver, 90% circulated is the way to go. Number 2, it's already recognized as money. Okay, that's important because not everybody out there is going to know what 3/9's fine, 4/9's fine. Hell, I guarantee 90% of the population doesn't know the difference between a troy ounce and an ounce, okay? So think about this for a second. It's already considered money. It's change. People know what it is. It's also silver weighing less than 1 troy ounce, so it's considered fractional silver. 90% silver coins, already recognized as currency or money, depending on what you want to call it. It's something the general population will more readily understand. It's fractional, it's divisible. You've got a lot of flexibility and variety with 90% silver coins. So those are 2 reasons. It's cheap and it's recognized as money. And I threw in a couple others, being divisible, aka fractional. These are good things. Now, which 90% silver coin do I think is the absolute best to buy and hold if you could only buy one, which you can buy many, so this isn't really, I guess I should say, plausible, but if you could only buy one, my friends, I think the Benjamin Franklin $50 is the one to buy, and here's why. First, Half dollars in general are the largest of the options between dimes and quarters and half dollars, right? So you're getting more silver in a single coin. Secondly, Franklins are fairly modern, but they are starting to get older. There is a good mix of stackers and collectors of Benjamin Franklin half dollars, creating a lot of liquidity for these coins, which is good. Now, due to their relative young age, many Franklins are in good shape as compared to older Walking Liberty or Barber half dollars. So in general, more silver content can be expected in a bag of these Franklins than you would in a $100 face bag of, say, Walking Liberty half dollars, okay? Because there's going to be more wear with the Walking Liberties, so less silver. So why not the John F. Kennedy half dollar then? Well, I am voting Franklin because you don't have to check the dates or the reads to see if a Franklin is a silver coin. All Franklins are 90% silver. I've never reached in a bag of Franklins and gone, gee, I wonder if this is 40% or 90%, right? That's not the case when you got a bunch of John F. Kennedy half dollars. You've got so many different versions, and only the 1964 John F. Kennedy half dollars are 90% silver. Now, to some, that's not a big deal, but to me, if you want to keep it as simple as possible, all Franklin half dollars are 90% silver. It takes the guesswork completely out of the equation. Again, I've never plucked a Franklin out of a bag and had to check the read or the date to see if it was silver. So 90% is a low to no premium. That's right. At times, you can get 90% silver at spot price or even below. It's cheap. It's also recognized as money, it's fractional, you have different varieties, and it has a big market of buyers and sellers creating liquidity, which is great. So what are the negatives? You got to throw in the negatives. Everything has a negative. And a few that come to mind are that it's not a fresh and pretty silver coin around, which a lot of people can't get over. Also, the coins themselves have been circulated, meaning, other guys have had them in their hands. They can be pretty beat up, they can be sticky, dingy, they can stink to handle. I do recommend you wear gloves if you plan to handle a bunch of 90% silver, unless, of course, you enjoy having smelly, smudgy hands. And finally, the other negative, which goes with most silver, is that it's bulky. So be prepared to have places to store it if you want to go big on silver. So that's my take on the safest, lowest premium method for accumulating physical silver in this market today, regardless of the spot price, okay? If spot's at 20, if spot's at 40, the 90% silver is going to be the cheapest way in most cases. Now, I know it isn't super exciting for many people. It's not real shiny and it's not always pretty, but it is a tested, tried, and true method for building and holding wealth in silver over time. Now, if low risk 90% silver isn't your thing, good news, there is another way to invest in precious metals, and you can do so on Wall Street, and that all starts with the miners. Now, silver is currently priced near $36 per ounce, making a 12-year high in spot price. And Wall Street's banks, including Bank of America, Goldman Sachs, and JP Morgan, they all forecast gold to hit $4,000 per ounce in 2026. We're talking about a year away. Mid-2026 is really only a year away. The beginning, half a year away. Now, the GDX index, which is, the GDX is really it's an ETF. It's a basket of companies that you can buy this ETF and gain exposure to the overall performance of companies in the gold mining industry. Well, that is also projected to rise. Of course it is. If spot's going up, then you can expect the ETFs to go up as well. Even more so than physical gold and silver. That's the thing. That's the risk and opportunity. If you think prices are going to go up and you have the money to invest and you have the risk tolerance to do so, you can make more money investing in the market in silver and gold than you can in just stacking it, right? However, you can also lose a lot more too. So that's why you got to look at your risk tolerance. Now, since bottoming out during the market panic of March 2020, back during the bug, silver has risen a modest 170%, okay? This is the primary reason that I want to highlight today's video sponsor, Argenta Silver. Now, Argenta Silver has the stock ticker symbol on the OTC of AGAGF. And when it comes to Wall Street, they are a pure silver play in the stock market. Now let's take a look at Argenta Silver and their recent acquisition of the El Cavar project in Argentina. What makes the El Cavar project right off the top to me look like something I want to know more about is the previous investment in this property by the prior owners who invested an estimated 60 million Canadian dollars into that project that they subsequently had to sell due to an emergency. So again, if you follow Warren Buffett, he talks about this all the time. Other people's tragedy, that's your opportunity. So Argenta Silver acquired the El Cavar project in September 2024, so a little less than a year ago, in a fire sale from Golden Minerals for just $3.5 million, who had to list the property to address immediate cash needs for financial stability of that company. So their loss is Argenta's gain. Now, Argenta does have a current market cap of approximately $47 million US, of which $8 million is cash on hand. And based on previous drill results, the El Cavar deposit does contain an indicated silver resource of 45.3 million ounces, along with an inferred resource of 4.1 million ounces. Now, these figures place each ounce of silver in the ground at the time of purchase at around 70 cents. Not too bad. Most interesting, however, to me is that less than 1% of the total project area has been previously explored. So this is the opportunity, okay? Create a massive opportunity for stock price revaluation. That's what Argenta is looking to do, and let's talk about it, okay? Argenta believes there is a lot more silver in the ground here, and they aim to prove it through drilling. And proving it will increase the value of the El Cavar property, and of course, subsequently, the stock price of Argenta, fulfilling Argenta's aim of creating shareholder value through drilling and exploration. So they're going to launch a drilling program. They're going to find a lot more silver on the property. That is going to create a revaluation of the property and therefore a higher stock price. Now, El Cavar is located in Argentina's top mining jurisdiction, the Salta province, which was also voted the best mining jurisdiction in all of Latin America by the Fraser Institute back in 2023. And politically, the environment hasn't been this good in my lifetime, all right? Argentine President Javier Milei, I believe that's how you pronounce his last name, is known for his pro-mining stance. He's a big supporter of, making Argentina great again. Gee, I wonder who would have thought of that slogan, okay? He has advocated for reduced environmental protections, however, that doesn't sit well with everybody, including those near glaciers and forests. He is doing so to facilitate mining activity in the country. His focus is to bring mining back, with his overall goal of boosting Argentina's economy through resource extraction and foreign investment. Now, I'll post links in the video description section if you'd like to learn more about the history and aims of Argenta Silver, as well as news links to help keep you up to date with their drilling progress, which of course is really what you want to be paying attention to here. Now, precious metal stacking and investing is hot in 2025. We've seen gold come up quite a bit. We've seen silver now banging on 12-year highs, and don't sleep on platinum, okay? It really sat pretty still for about 5 years, and platinum's it's doing its thing, okay? So whether you are stacking or investing, do remember to always consider your risk tolerance. I wouldn't ever recommend going all in on anything, and pace yourself and stay within your budget. Set measurable goals, set realistic timelines, and trust me, if you stick to it, you'll grow your wealth. I hope that you enjoyed today's video, and I'd like to thank all of you that made it here to the end. And of course, I always look forward to seeing your comments down in the video description section and chatting with you again soon about our favorite topics, gold and silver. Thanks everybody for checking out today's video. Keep stacking, my friends, and I'll see you back soon.
Thank you for watching our video. I hope you subscribe to our YouTube channel.